Hello, everybody. Very happy to be here with Peter Wright, co-founder of Interact. My name is Rafael Gonçalves, and I'm the communications coordinator for CarConnex. And welcome to the Core Talks. If you're on LinkedIn, on YouTube, on Facebook, I'm very happy to have you here. Good morning, good evening, or good afternoon, depending on where you are at, because we are here talking to the whole community. Peter, welcome. I'm very happy, very excited to have this great core partner here on the show. So tell us a little bit more about you, and I would love to hear more about your company.
Wonderful.
Please, the stage is yours.
Thank you very much for having me, and happy to be part of your amazing network. I've been amazed at what you and Oscar and the team at Core Connect have done for entrepreneurial people and companies that want to be part of the bigger, broader capital markets. My background, I'm actually maybe one of the most memorable things is I was born and raised in Alaska.
Wow.
And, always had a passion for the investment research industry. My passion is really finding the undiscovered. So finding undiscovered stocks, finding less discovered wines. My passion is finding things that are not necessarily known by all. Background really is in research. I was a sell-side analyst for a number of years at CIBC World Markets, buy-side analyst at Fidelity, covering semiconductor stocks during that 10-year. Director of research at a shop called Tradition that was starting up a research group. And then I ran Boston institutional sales for Cantor Fitzgerald. So I've seen research from a sell-side, buy-side, managing the product and selling the product perspective. About 4 years ago, started a company, Interact, which is really about making actionable introductions. It's a capital introduction company. And the passion that I have on undiscovered really is kind of the core of what we do. We focus on helping companies in the inefficient part of the capital markets find investors.
Wow, that's amazing. I almost regret now, because we are talking about AI and investments. I almost regret that you should be talking about wine, right? You said you love discovering wines. I almost regret it by now, but okay, let's stick it to the plan. We have lots of entrepreneurs that listen to us, that rely on us, so we can schedule another session to talk about your wine discoveries.
Count me in. Count me in. I love it. I love it.
Yeah, I have a feeling that this is going to be this would be our best show ever. But I have to ask. The company is called Interact. The act in the name, is it based on the Jobs Act?
Right. So the idea is actionable introductions is the intro act. So if you reverse it, actionable introductions, and you brought up AI, and so that's a really good way to think of it. So we have a process for making capital introduction that is a little different than the traditional way. For a couple hundred years, if you think of what a broker dealer does, it's really connecting issuers and entrepreneurs with capital, and they're the middlemen doing that. The way that they do it is largely kind of a Rolodex approach. They are big companies with lots of people, each of those professionals having a Rolodex of relationships that they market, deal flow to and ideas. AI, artificial intelligence, enables you to approach connecting these two worlds, issuers and investors, in a different way, a more data-driven approach. So when connecting the inefficient part of the market, the economics just don't really support a Rolodex-driven approach often of setting up meetings. So a lot of the companies that might be on your platform, Reg 8, they're smaller companies, and it's sometimes hard to get the attention of bigger institutional investors. So what you want to do is study their behavior, and the way you could do that very efficiently is through AI. If you think of the stack in AI, really there's aggregating data. And in our case, we look at about 800 different factors that fall into five categories. So fundamental data, how is your sales growing? What is your margin profile? What is your capital requirements to grow your business? That's fundamental factors. The second type of data that we use in our system is valuation data, which is usually using a fundamental factor against the price of your underlying security, whether it be a market cap or an enterprise value, relative to a fundamental factor. The third type of data that we look at is sentiment data, and this is very important. This is what kind of the experts out there are expecting from you. So earnings estimates, target prices, ratings, headlines, news flow on your name. All of this stuff goes into kind of the sentiment of how people are feeling about your stock. The fourth bucket is technical factors, which are really price and volume. If you think of your price and how much volume is behind it, it's manipulation of that into many different things such as moving averages or relative strength or whatever. And then the fifth and final one is macro factors. So GDP, inflation, jobs data, all of that. But those are the 5 types of data that typically get consumed by an investor, institutional investor, when making a decision to buy or sell stock. So that's the data that we put in. About 800 of those factors go into our model and have been tested. We create super factors, which is combinations of these factors. There's about 60 of those to give you an idea of these factors. And what we do is train on pattern recognition. So we train on 13F data of these 7,000 or so institutional investors, and we say, what is their behavior? What are they doing? What are they buying? What are they selling? And against these 800 factors, our system learns what they like most to buy and what they like most to sell. And so that's the first step in a 3-step process of capital introduction, is finding, the right type of investor that you should be selling your story to. Just like you sell any product, the first one is getting your target market right. So we use a data-driven approach, AI approach to doing that. So that derives our target list. Or
wow, you probably have a huge Alexa behind it, right?
Well, that's the thing. So when people say, a database, is a database of investors worth that much? Not really, because you don't have relationships to it and you don't really have the intelligence behind it. So if you look at a database of 160,000 investors or so, institutional investors, which is, I think, about what our database has, it's really not that valuable. What do you do with that as an individual company? It's too much. It's big data. It's not intelligent. So you have to funnel it down through some form of intelligence to figure out who within that 160,000 is the right ones for you.
Wow.
So the second step we do is research, which is my passion, my love. And so research is really all about building awareness. So once you've got that distribution list, what you want to do is put forms of content, video like this, or written research in front of investors to make them aware of why you're a special story and why the world needs your company and your entrepreneurship. And from there, we put it over a platform. There's lots of platforms you can use. We happen to use SendGrid, but it enables us to track opens and clicks. So at Introact, we make no cold calls. So that's the funny thing, is we have a data-driven approach. We don't use a Rolodex, yet we make no cold calls. And how do we do that? Simple in today's world. As everybody who's selling any product, you can see kind of the viewership data, if you will, in our case, of who's opening, who's clicking, who's downloading the reports. So we might send a report on a company to 5,000 investors, but if only 150 or 200 of those investors, click on those reports routinely, month after month after month, we have our target list. We don't care about the other, 4,800 that didn't. We'll try and get them in a more efficient way over time. But what we really want to do is cultivate relationships with that list. So it's a funnel process, and then we set meetings for the companies, the issuers we work for, with these investors that are consuming this content.
Wow, yeah, really, that's a really intelligent approach, actually, right? Because if you have like big data, like you just said, 160,000 investors, you're not gonna call everyone. It's unreal, right?
Right.
You can't do that. You cannot have enough manpower to do that. But and narrowing down really impacts the process of investor acquisition, right? You really change the approach you have on investors. You really change the approach you have towards the companies raising capital, right? And how is it coming for the investor acquisition business?
Say that again. What is it for the
Sorry.
investor?
How do you feel it towards the investor acquisition business? Do you believe that this technology is the future, is the present? You think it's going to grow? How do you feel about it?
I think it's really changing. So the rules are changing around privacy, rules in the kind of the
Hmm.
retail world. Um, there is a concentration of wealth at all levels. At the micro level and at the macro level. So everybody thinks about concentration of wealth in the form of the top 10% of civilization is getting more and more and more wealth. Same is true in a lot of things right now. And sometimes I've thought we're living in the second Gilded Age, in where monopolies rule, monopolies are able to concentrate more and more wealth. In the institutional investment world, it's very true, that more wealth is concentrating among the big guys, among passive ETFs. But what that means is it's just more important than ever for smaller companies and entrepreneurs to be able to smartly attract the smaller investors, the RIAs and family offices that are willing and able to invest in their type of story. And so capital introduction is absolutely alive and well. It's just we're big believers that the world is moving to ways where that process has to be much more efficiently driven through technology, through AI, as there's fewer middlemen that are able to really monetize that type of capital introduction for smaller players.
Yeah, yeah. Smaller players generally they can rely on that, right? On technology. And technology is the small company's best friend, I believe, right? Because I mean, you can sell, you can find customers on Instagram, you can find customers on Facebook ads, you can target ads, and targeting is really all about it right now, right? Uh,
That's it.
so you guys act among four industries, right? You have cannabis, you have mobility. Which of these markets do you find more challenging? I think, I suppose I may be wrong, that mobility, due to its nature, is really challenging because we're talking about the early stages of clean mobility. But cannabis also has regulatory issues. So tell us a little bit more about the challenges you face in the industries you act.
I love it. That's one of my favorite topics. So how do we go about selecting the industries that we want to focus on? What we focus on is progressive industries. So I'll give you a statistic that's kind of mind blowing. If you think of the efficient market as the Russell 3000 and the inefficient market as maybe the 5,000 publicly traded companies below that, and you were to create an index out of those two groups of companies, over time, since the beginning of 2000, January 1st of 2000, so 20, 21 years of data, 22 years of data, the efficient market actually outperforms the inefficient market on an index basis in the long run. However, this is a really interesting stat. In every single quarter, with the exception of two, if you created an index of the top 25 names in the inefficient versus the efficient market, you outperformed almost every time, reshuffling into the inefficient market. Which basically, if you
Wow.
take a step back, says if you're a good stock picker, you can make a lot more money playing the inefficient market than the efficient market. A lot more. So the delta is about 8x. It's an enormous delta between the two situations. So the what it makes me realize is that what you really want to do is find diamonds in the rough. So how do you find diamonds in the rough? Our system appears maybe qualitative at a high level. It's very quantitative. What we cover is what we call progressive industries. Progressive industries are defined as the industry within a sector that is attracting the most new capital. So within consumer staples as the sector, cannabis happened in 2020 and 2021 to be attracting the most new capital coming from. It's a formula that we have looking at number of companies and dollars value. So it's a weighted basis that we look at it. But cannabis happened to be defined as the industry that had the most new names and the most new capital on a combined basis coming in. Private and public markets we're looking at. progressive industry cycles. So within consumer discretionary, as you mentioned, it's mobility. Within financials, it's crypto. Within industrials, it's space tech. Space tech we're launching on next month. Very excited about
Wow.
that sector that will be coming out on. And so within every sector, we look at this progressive industry, and it's really defined just very simply as where the most new capital is coming to work. And the reason we do this, Rafael, is that we really are believers in efficient market. So we think that getting an information advantage on the Intels and Exxons of the world is very difficult because so many people cover it and it's efficiently priced in the market. That is not the case for these emerging industries.
Hmm.
So we focus on these emerging industries where there really is an opportunity to create disproportionate value for investors by finding these diamonds in the rough where new capital concentration exists.
Wow, that's amazing. That's amazing. Talking about underdogs, huh? Yeah, and cannabis has been facing a lot of regulatory issues. We know that because some places, a lot of places, it's still illegal, uh, both for recreational use or for medical use. The med tech industry is starting to open this debate, and cannabis has been both in the USA and Canada. It's the scene is changing quickly, but throughout the world, it isn't. And I believe it should be data driven, right? Because you're not going to convince someone, no, invest in cannabis, but it's illegal in a lot of places. No, but invest in cannabis. Trust me, you're not trusting you. The person, the investor is trusting data, right?
That's it. I mean, cannabis is a really good um, industry to analyze, and the thing I would say is if you were in the industry as an operator, there's challenges in every industry for sure. Regulatory, competition, changing regulations. There's lots of things that 280E, which is a tax situation, tax at gross margin instead of operating margin line. Lots of challenges in cannabis. However, if you were an operator, what you would realize is you're in an absolute growth industry. Happens to be a lot of private players are doing quite well. Some of the bigger public companies aren't doing quite as well because they're investing for the future. So their economics are not quite generating the same cash flow some of these private companies are. The U.S. versus Canadian situation very different. You know, U.S. happens to be making a lot more money. The economics are much better in the U.S. than Canada for the industry. Just the way it was set up and kind of the competitive landscape. Again, the market has not rewarded cannabis for the fundamental growth and the fundamental cash generation that's already occurring in the industry as a whole. And the biggest reason for that goes to one of the fundamental reasons we started this company. So Interact's technology side actually came from a couple professors out of BU. A guy named Charles DeLisi, who worked on the Human Genome Project, a very smart data scientist. It's sort of the bioinformatics division at BU, and Mark Kahn, who's the head of the statistics department there. And these two professors started a hedge fund strategy, which was really under the belief it was a low frequency trading that really was under the belief if you could understand how many buyers and how many sellers a given stock had, that's all you needed to know. You didn't need to know anything about their fundamentals and valuation and sentiment and
Mhm.
macro data, technical data. That's the stuff we look at. At the end of the day, if you could figure out who has more buyers on a weighted average basis, not all buyers are the same and sellers are the same, but on a weighted average basis, if you look at a stock and you have 10 buyers and all buyers are equal size and you have 5 sellers, is the stock going to go up or down? The stock's going to go up. If you have 10 sellers and 5 buyers, all investors equal size in this example, is the stock going up or down? It's going down. So you can predict with 100% certainty if you can figure out who's buying and selling. And that's kind of their strategy and some of the intelligence that's performed quite well. That's the technology that we leveraged at kind of finding
Nice.
investors for targeting. But the same thing is true for cannabis. Bringing this back to cannabis, do I think cannabis is going to be a wonderful sector to invest in the future? Absolutely. And the statistic I would look at for that hockey stick is when institutional investors can start to invest in the space. So right now, if you look at ownership of the cannabis industry, it's about 10% institutional. A lot of Canadian institutions, there's some hedge funds that are playing it and stuff like that, but most institutions aren't investing in it because they can't get, the custody player behind them to do it, or they fear that, it's not federally legal yet, so they could be,
Hmm.
violating some crimes. So if you look at some of the regulations, I don't think cannabis is going to be federally legalized in the US ever. They're building it on a state by state basis, like other topics, not to compare it to anything very controversial now, but like abortion and like a lot of these things are going to
Hmm.
be controlled at the state level. Cannabis is going to be controlled at the state level as well. I'm pretty sure of that. But
Hmm.
decriminalization, passing things like the State Act, passing things like the SAFE Act that make it easier for the capital markets and the banking industry to support this growth industry and tax it, is healthy. It's certainly going to happen. It's just a matter of time when that happens. As soon as that happens, institutions are going to step into this industry, and there's going to be a hockey stick. You're going to be behind it. It's just waiting for it. And sometimes you're better off waiting for it to happen and then participating in it. And that's the game that investors play. How much do you want to anticipate?
Hmm. Yeah, and actually, Joe Biden has already stood for decriminalization a couple of times, right? So, in the USA, it's more like a state policy, but I agree. I don't think it's going to be federally illegal ever, and especially considering the amount of money that the potential money that this market can have, and taxes that can be paid, right?
Yeah.
They are all players in this. They are all players in this game. What about mobility? I worked for 10 years in the mobility business, and I know that mobility companies, car makers, even people in the oil business, especially if we have a war going on right now, right, between Russia and Ukraine. The petroleum prices, they are extremely unpredictable, and mobility services have been growing a lot, right? Electric cars, batteries, even shared car services. Yeah, how do you see the mobility market in the next couple of years?
So if you think of mobility, three big themes, and you touched on, I think, all of them. So transportation is getting smarter, so it's getting autonomous. Transportation is getting more efficient. That's the share ride. So if you think of how many cars are parked, not being utilized, if you could utilize it better,
Yes.
so more efficiency and cleaner. So batteries and more efficient in kind of from an energy equation perspective. So smarter, more efficient use and cleaner. So, I think from an investment perspective, batteries is really similar to, I think it's the next semiconductors that are kind of starting now.
Hmm.
So whether it be, solid state printed batteries, I think there's going to be some room there, but I think batteries are very, very real, on the EV situation and starting to take off. And we know that that's going to be everything is going battery at some point. ICE,
Hmm.
internal combustion engine type cars are going to be collector's items here pretty soon, or race cars and stuff like that possibly, but not anything on the streets for a while, in 10 years from now. The I think that that's an industry where scale matters. So I would say, if you look at the auto industry today, would I discount, the GMs and Fords and Toyotas and Volkswagens getting into the EV business? Definitely not. They could be big players like Tesla and take their fair
Hmm.
share of market share. The problem with the investment landscape is if you look at how those big companies that I just mentioned are valued, their asset value, their number of factories that they have that build these ICE cars, internal combustion engine cars, are becoming worthless. So they're going to have to go through this cycle, and conversion of kind of reinventing their book value, if you will. So their book value is going to be replaced with a lot of
Hmm.
investment. So companies like Tesla have an enormous advantage over these bigger guys just from a cost of capital perspective because they're clean. Their gigafactories are going to continue to be gigafactories. They don't have to reinvent themselves while these other guys really have to write off their book over a period of time. But I think that I think there's lots of opportunities. There's lots of companies that are in your network, Rafael, the CoreX network, that are solving for pieces of this. And I think one of the things that I look for to find diamonds in the rough is starting with what is your ecosystem. So any one entrepreneur is only one entrepreneur. When you have something like mobility, which is an enormous opportunity, how are you going to be addressing that enormous opportunity? You can't do it alone. So
Yes.
one of the best questions to ask is, what is your ecosystem? Who are the other big guys that you're going to be riding on the coattails of to make yourself bigger?
Yeah, I worked almost 10 years for Volkswagen in Brazil, and we had an estimate, at least in Brazil, I don't know in other countries, but for every job inside Volkswagen, it would generate 7 jobs in the industry around it: suppliers, parts, resellers, and
Wow,
transportation. That's a huge ecosystem, right? If you multiply by 7 the number of jobs created, that's your ecosystem, right?
that's a powerful stat. I like that. Yeah.
Yeah, at least in Brazil. I don't know exactly in other places, but for every job inside the factory, we had 7 around it. Either in banking, because I worked for the financial services division, either in banking or parts or transportation or paint or anything else. We had 7 jobs. So that's exactly what you talk about, ecosystem. And mobility is getting really smarter. I mean, I know a lot of people that uh, sold their cars to use apps, to move through applications and hire rent cars, or I mean, it's smart. It's smarter. It's cheaper. It's eco-friendly, and I really believe that in investments rely on that, right? Because if you have an efficient company, an eco-friendly company, a profitable company, wow, who doesn't want to go there, right?
Yeah. Yeah. That's amazing.
Yeah, we all want to be part of it. You also Interact also works on cloud-based solutions, right?
Cloud-based solutions for, you mean ourselves? We're a cloud-based company. Yes.
Okay, all right. So yeah, cloud, the cloud is there, right? Because AI is all about cloud information, having information on the cloud, right? That's good. That's good. So we're reaching half an hour, so we don't want to bore people that are watching us live on LinkedIn or YouTube or Facebook. I just have one more question. Do you believe that this artificial intelligence system for capital raising, it reduces risks, of course, as you just said, but do you believe that it also helps the compliance environment? Because you have to be compliant full time. Otherwise, AI will automatically cut you out
Right.
of it, right?
Definitely. No, and I think that I think that it's actually a very interesting point, and AI could really compliance is something that is a specialist. It's a back office, typically a lawyer, a smart person, trying to keep everybody compliant and on the right side of the law and the regulations. And what AI does when you do it is it brings it down to the user level. So it's replicating human behavior. So the way that I think about it, if you take a step back, is if you think of technology, there's hardware, there's software, and there's service. I guess is kind of the three sectors of technology. And hardware is really robotics and all the things that a human senses do. So they can see, they can hear, they can smell, they can touch, they can manually move stuff. All of that is robotically being replaced. Um, Software is really replacing the brain, and it's predicting, it's analyzing, it's optimizing, and AI is really kind of an extension and kind of next generation of where software can go. And it's a segment of kind of that software industry of making things smarter, using data, analyzing data, and making things predictive, and optimized. So in compliance, for example, one of the things that I see a big benefit of using AI is you don't need to rely on somebody in a back office to be keeping you completely clean. They might be setting the rules, they might still be very much required, but that one person in the back office running compliance can't be watching every single sales guy and every single person, out in the field. AI can deliver applications to the endpoints and optimize, and predict when you might be running into a compliance or risk of any sort. So AI is just more ubiquitous, in enabling intelligence to be with each individual person. You've got a certain skill set. I've got a certain skill set. If we rely on a piece of software that brings some intelligence and predictive and optimization capability to us, all of us can be more efficient. And that's really the way that I see AI. So compliance is just one example of what AI can optimize and bring down.
Yeah, yes. Especially at CarConnex, we compliance is a very important subject because we enable companies to raise capital from non-accredited investors. So of course, people have to believe, to trust what we're doing. People have to trust the companies. The companies have to trust people, and compliance is obviously a big deal. It's part of our daily routine, right? And also AI can also help us a lot achieve goals, always compliantly, of course, because that's the only way to do business. And AI is is the biggest tool we have now, I believe, right? AI is really changing the way everyone's business and how we operate and how we do things and how we get things done. Everybody's got an Alexa behind, right, or a Siri or a virtual assistant to help play songs or to help remember the tasks or keep the track of their schedule. I set my Alexa here to remind me of some deadlines I had for my PhD thesis, and it helped me a lot. So we can always use technology for better, right?
I love it. I love it. You're right.
Yes, Peter. So it was great. It was great meeting you. It was a great chat. I hope our listeners enjoyed it. Do you have any thoughts? Any message you'd like to convey to finish? If you'd like to invite people to follow your company, please. The stage is yours.
Absolutely. Well, I'm appreciative of being part of your network. It's a very powerful network. I think it's more powerful than just raising the capital. I think you're empowering a lot of entrepreneurs to follow their dreams and make the world a better place. And it sounds maybe corny, but I'm a big believer that what you're doing is much more powerful than what a lot of the bigger companies are doing. And more ideas from more people is better. And just happy to be part of your ecosystem. So if I could ever be helpful to any of your clients looking to kind of expand their ownership base, their capital structure, cap table into kind of an institutional type situation, would love to be helpful to them.
Well, that's great. I'm sure our listeners, people that get our newsletter, people that follow us on LinkedIn, they definitely love this chat. It was great meeting you, Peter. Thank you very much. And to anyone who's listening to us, to everybody out there, don't forget to follow us on LinkedIn, YouTube, Facebook. We are also on Spotify. You can look up Core Talks and you can follow us. This is the 11th episode. We already have a small library that we're building up, right? We keep building it up, and it's getting richer and richer. And it was a great moment being here with you, Peter. I learned a lot. I learned a lot every day at this job. It's been an adventure, and thanks again. Thanks a lot for being with us today.
Thank you so much.
Thank you. See you soon.